Japan has avoided falling into a recession for the fifth time since the global financial crisis. Joining me on the line is Stuart Allsop from BMI Research. Stuart, do you believe that the upwards revision of data today is a significant reflection on Japan's economy at present?
I would say it is. I think that Japan now finds itself in a situation where it's not really in recession, it's not really growing, it's kind of in that in-between area. And in our view, this is not something that will change significantly as we go into 2016. We are not expecting the economy to take off. We think that growth of sub 1% is really something that investors and economy watchers should get used to for Japan over the coming years.
Japan's economy avoided a technical recession in the 3 months to September. 1.5% growth is forecast in the current quarter. How sustainable is this?
Well, I think that 1.5% is possible for this to come out in Q4, but in order for growth of 1.5% to be sustained over 2016 and beyond, in the context of a very negative demographic situation, I think you would need a tremendous amount of structural reform, which is not something that we expect to take place. We have seen some positives in terms of corporate governance. Just recently, the announcement by the large banks that they would be selling off their cross-shareholdings. This is a positive development in terms of the allocation of credit in the economy and sort of likely to improve the efficiency of the economy going forward. But for us, there are two main areas that are inhibiting growth and will prevent growth from accelerating beyond 1% on a sustainable basis. The first one is the exceptionally low interest rates, which prevent or which essentially allow unproductive businesses to remain going concerns and actually reduce overall productivity. And the second one is the increasing share or the increasingly large government as a share of GDP. So government spending relative to GDP has increased year in, year out since the global financial crisis, or since 2010 rather. And this is something that is being allowed by the exceptionally low interest rates. And while ever this combination of policies remains in place, as we think it will continue to undermine Japan's productivity. So in answer to the question, I think 1.5% growth would be unsustainable.
Analysts said today's numbers were stronger than expected. Japan's central bank is currently in easing mode. Is this set to change once we see a much anticipated move from the Federal Reserve?
It's an interesting question because, I mean, you have a very, very strong easing bias by the Bank of Japan, and as you do for most of the rest of the developed world. At the same time, of course, the US looks very intent on increasing interest rates next week. So it puts the Bank of Japan in a difficult position, but we believe that the most likely scenario for the Bank of Japan is more easing, because the likelihood is that the increase in interest rates in the US will act as a headwind to the growth in the US economy, which we see is already slowing down. So if that were to happen, external demand would weaken for the Japanese economy, and you would likely see the Bank of Japan increase its asset purchases. So its monetary policy would become even looser rather than tighter. And in fact, we expect the Bank of Japan to expand its balance sheet further in early 2016.
Taking a look at the Japanese yen, we're seeing a bullish fight back on the US dollar against the Japanese yen. What do you expect from the currency pair in the short term?
Well, there are two opposing forces on the yen. I mean, everything I've said so far here has been yen negative. Weak economy, more monetary easing, the fact that the US is likely to experience higher rates. All these things suggest that the yen should be weaker. But on the other hand, you have the yen is still somewhat of a global safe haven. and it does tend to appreciate at times of global risk aversion. And we see very, very strong potential for a large downside move in global equities. And if this were to transpire, it would likely provide very strong support for the yen. So I think on balance, I would say that, or rather, both of these forces are likely to balance out, resulting in the yen sort of fluctuating around where it currently is. So no kind of clear directional move, higher or lower, just a lot of volatility around its current level.
Well, Stuart, thank you for your insights. That's all from me, but click back tomorrow where Sinead McLaughlin will be looking at the currency pair, the Kiwi dollar. Goodbye for now.